Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we will share with you all the highlights of the stock market's day's trade and also the closing action with you. All the news points right here, the different sectors and the stocks that are buzzing in trade, and how should you be really approaching the markets and your investments just a day ahead of the union budget. We've also seen the economic survey being tabled in the Parliament today. All sorts of highlights. We will share all of those and what they mean and what they can indicate for the upcoming union budget as well. We will discuss that with an expert, but first up, a quick check of how the markets are faring at this point in time. Look at the screen and it looks like red at this point in time. It's been volatile for the last half an hour, 1 hour. 35 points down right now for the Sensex, 59,460. 17,636 for the Nifty, down about 10 odd points. So a lackluster trade amid all this volatility that we've been seeing throughout the trading session. Once the economic survey was stable, we did see a slight recovery from the lows of the day, but the markets are again coming in that volatile zone as well. Talk about the other factors, the broader market indices as well. How are the markets really trading at this point in time? The mid and the small caps, if you see, they are still up in the green. The small caps really taking the lead at this point in time, bucking the trend. 2.5% uptick. Mid caps up by 1.4% odd as well. The Nifty mid cap 50 is up by 1.7%. The India VIX has in fact slipped by 2.8%. It right now is around 17.2. In terms of the advanced decline ratio, fairly divided at this point. 27 declines to 23 advances when you talk about the Nifty 50 stocks. In terms of the various sectors, how are they performing in trade? More greens than reds at this point in time. The IT sector is down, however. It was seen in an uptrend yesterday, but largely all of those gains are being converted into losses today. Pharma sector down in trade, 0.7% of a decline right there, 0.18% of a fall for the financial services. But what's really keeping the markets, stemming the losses for the markets today, keeping the markets a little stable? Metals are shining bright, 1.5%. Look at the PSU banks. They have recovered most of the losses, that they actually saw yesterday. 2 or 3 days, they have been consecutively under pressure, 3.6% of an uptick for that one. The auto sector is up by 1.8% odd as well. FMCG slight gains coming in. Media stocks are doing well. 0.5% uptick for the realty pack as well. The private banks also coming in tow and helping the overall Nifty bank, which is up by 0.4% odd. Which are the top gainers today? It's M&M, 3.7% uptick. News flow is definitely helping in. Adani Enterprises amidst the FPO really ending today. Today is the last day of the FPO. We'll talk about that too. Ultratech Cement, SBI, Adani Ports also now up in the green, 2.7% of an uptick. Losers include lists like Bajaj Finance, that's down under pressure, 2% down in trade. Tech Mahindra, TCS, the IT majors that are declining. Britannia and HDFC Life, the other laggards at this point in time. But time now to welcome our guest for the day. Mr. Avinash Gorakshakar joins in from Profit Mart Securities, the Director of Equity Research there. Welcome, Mr. Gorakshakar, and thank you so much for taking the time out. Well, first up, a comment right ahead of the budget. The markets are a little sulking, but do we see a recover? Are they just still in a waiting buy zone, standing by just for the budget announcements?
Good afternoon, Sakshi. I think markets are waiting for the final budget to be presented tomorrow, and I think today's movement is again slightly choppy. I think we saw a negative movement in the morning. Then I think the markets recovered. Even as of now, what has actually driven the market today is most of the mid caps, as seen by the mid cap index. The frontline companies still continue to be under pressure, and I would believe that obviously tomorrow, once the budget is presented, the markets could get a sense of some relief. More importantly, as you mentioned earlier, I think the Adani FPO has also closed successfully. So that overhang in the market also got complete. So I think now all said and done, I think tomorrow's budget is going to be the key director, the directional kind of factor, which will obviously give a directional trend to the market. So till then, I think you could see levels of 17,600, 700 in the very near term, and hopefully whatever comes out in the budget is going to drive reactions tomorrow in the market once the market opens tomorrow.
So what would you really recommend all the investors to do at this point in time? Should they also just stay put and wait by for the announcements to come to really have a relook at the portfolio that they hold right now, or should they start picking up some of those usual budget themes that we really look at, which get attracted with a lot of allocations coming in, announcements coming in, railway for example, infrastructure for example, all of these packs, agriculture, fertilizer, these kind of stocks. Should one really look at buying them ahead of the budget?
Yeah, I think my guess is, Sakshi, now there's hardly a day left for the budget to be actually announced. So it's better to wait and watch and to actually understand what the government is going to present. My sense is it's going to be a growth-oriented budget, and obviously a lot of discipline is going to be put on the fiscal deficit. So I think if these two parameters are followed, the markets would definitely be happy, considering the fact that everyone in the market was expecting that this is going to be a pre-election budget. Some sort of freebies could come in the sense that 2024 is the general election. But I think management of fiscal deficit, having a robust kind of GDP growth rate, and most importantly, spending on infrastructure, capital goods, manufacturing, healthcare. I think these would be the sectors where I think investors should keep a close watch. But it's better to wait for the final, blueprint to be out. Once that is out, then I think one can take a conscious call as to how one can deploy, one's portfolio over the next, say, 6 to 12 months.
All right, understood that as well. But the big news point today, the Adani FPO, I wanted to take your view right here. Finally, it's been subscribed, the final figures really coming in, almost final figures really coming in right there. But how do you really see it? Looks like, the big institutional investors have proven to be the saving grace for the FPO. The stock has definitely inched up. Your thoughts on the FPO now that it's getting sailed through? What does it really mean?
See, actually, Sakshi, this FPO of 20,000 crores, only 10,000 crores was going to be payable on application. So only 50% of the amount was payable.
Hmm.
My guess is that yesterday a very large institutional investor from Abu Dhabi actually,
Yes.
made a formal announcement of investing in the FPO of Adani,
Sure.
Enterprises. Today also, I think it's going to be. It has been the institutional investors who have actually helped the issue subscribe, because retail investors typically look at the market price, and if there is a wide difference between the FPO price and the market price, the
Hmm.
retail investors would definitely not chip in. So to that extent, it's been a disappointment for the Adani Enterprises management that they were looking forward for a larger retail participation.
Yes.
But I think net the issue has got oversubscribed, which is very important, because the management had stuck to its gun, saying that the price would not be changed, nor the timing or the closure of the issue would be changed. So to that extent, I think the management has been successful in warding off whatever negative kind of news flows which have come in the last few days.
Absolutely. So let's just, for our viewers also, let's tell them the current figures, the latest figures that we have. So the total is almost 0.97 or 1 times, it has been subscribed, with the one-time subscription coming in from the QIB Anchor Book Institutional. Also, QIB institutional investors have also subscribed 1.02 times. The non-institutional investors in Adani Enterprises FPO have subscribed 2.89 times right there. Also, when you talk about the retail, that has been just subscribed 0.1%, 0.11%, 0.11 times is what the subscription is right now. The employees have subscribed half times as well, 0.52 times as well right there. So this has definitely lifted the sentiment for Adani Enterprises. The stock is up by 3.4 odd percent right now, closer to the overall FPO price band that we had seen. But why are the other stocks still falling? And how does one really approach or the whole Adani Group stock? On one side, we have Adani Enterprises, which is sailing through on the back of FPO. But what about the others? The Hindenburg effect still seems to be largely at play.
Yeah, I think my guess is, Sakshi, whenever such kind of negative news flow hits any particular group of stocks, it takes a little time for the markets to digest this news flow. And I think you're right in the fact that, even as of now, some negative surprises or negative news flows have been, hurting market sentiments very badly. If you look at Adani Green, if you look at Adani Ports, these are well-established companies with good cash flow generation. But unfortunately, current sentiment is prevailing, and I think you're going to see a lot of volatility in these counters till the dust settles down. So my sense is it may take a couple of months more before we could see a decent rise for all these Adani Group companies, because most of these companies had reached peak levels, almost 52-week high levels in a very short period of time. So I think now most of the people are preferring to book out. They're preferring to sit on cash. So I think in the near term, I would not be surprised that there could be a lackluster performance at least till the March
Okay.
April.
Right. So as we get to see right now, we're getting the latest figures of Adani FPO. The issue has been fully subscribed now, and completely. In fact, if you see, the QIB portion is has got the largest amount of subscriptions coming in right there. That is what we have. We'll have the flashes also come up on your screens right now. You can see 3.18% uptick for the Adani Enterprises stock, 2,984. That's the level at which it is trading at, 92 rupees up in today's trade as well. So that's the kind of momentum. Fully subscribed. Finally, on the last day, final day, we have seen Adani Enterprises FPO getting fully subscribed right there. So finally, a big, relief, Avinash, you believe, for the management, which has been roiled in controversy over the last 3 days, and they also must be looking at some critical calls, making critical calls to the institutional, even though the management did come on our platform as well and said that it will be the institutionals which will help the FPO really sail through. But what does it really mean for the small retail investor? No opportunity for them to really look at this as an opportunity to participate. The FPO price was higher, the stock went in lower. For all those who did, what will it really mean?
No, I think, Sakshi, the management did clarify on various channels that they were at a loss to retail investors because they consciously wanted the retail, investors to participate. But looking at the kind of market price and kind of erosion in the last few weeks, obviously, the retail investor has kept away. But one good part is that now there would be a large institutional kind of shareholding in the
Yeah.
company's shareholding structure, which is definitely a big positive.
Yeah.
If you know, most of the Adani Group companies, the promoter holds about 74 to 75%, and very
Yeah.
little institutional stake was present earlier. So I think this would give a little more maturity and little more credibility to the group. So I think in that aspect, it is definitely a positive, in the longer term. And I think this is something which will obviously improve valuations as we go forward.
And what about the debt concerns? Do they also get reduced from here on? Can the group really use the money to, perhaps look at reducing debt in the eventual course and perhaps silence some of the critics that have been talking about it?
Yeah, I think Sakshi, you must understand one thing that debt repayment is going to be a small piece in the overall strategy for the Adani Group, because considering the kind of expansion and the kind of new businesses Adani Group is entering,
Hmm.
their only strategy is to fund it by a large percentage of debt. So as long as they generate cash flows, I think the markets would be comfortable. In the very near term, it would obviously be a little pain point because debt on the balance sheet is never a good part which most investors like. But
Yeah.
definitely longer term, if there are hard assets which are created, I don't think there would be any issues on the servicing part of the debt.
Hmm. Okay, understood that. Also, there's just this one question that everybody wants to know. We do not know where this will, progress going forward. All the developments will have to be watched on a daily basis as well. Right now, this is not the end, it seems, of the controversy that has just sprung because of the Hindenburg report. But what could perhaps be a concern is that if this snowballs into a black swan event. Now, we are looking at the budget. There are expectations that the finance minister could also come ahead and talk about that these kind of groups and companies which also have been, which have attracted a lot of investors to put their money right in. That should not be, retail investors should not be deterred to put their money in the stock markets. That's something that everybody wants to hear from the finance minister, that even if there is a group or a company that gets into, a situation like this, how would you be really looking at this scenario? Do you think that this could spring into a bigger concern that could be a prolonged concern for the markets?
I think, see, frankly, Sakshi, this is an event which I think my sense is, at least for the near term, most of the controversies are now completely, resolved. I would not be surprised that beyond that, any further kind of negative surprises could come in. And most importantly, you mentioned, retail investors. I think the management could have gone and lowered the, flow price by about 10%, but
Hmm.
they did not do it. So obviously, it depends on the management as to what it's thinking on the pricing is, because
Yeah.
clearly it shows their level of confidence and it shows the level of commitment which they had given earlier. So I would believe that these are going to be events which are completely unplanned and unpredicted. So we'll have to take it as and when, as and how we grow. I would not be very clear that whether it happens to one group or because it has happened due to some corporate rivalry or due to any other factor. It's very difficult to quantify. But yes,
Right.
definitely what happened was completely unexpected. And I think these events are, one-off events. I don't think that's going to stop the mood in the market from going up if, at all the budget does come much better than what the market expects.
Okay, noted that. Well, just before we wind down, Economic Survey 2023 has been tabled today. The key highlights included that the GDP growth has been mentioned at as probably 7%, potential real GDP growth for FY23, and then a band of 6 to 6.8% for FY24. So that's something we are looking at, which is in line with large expectations coming in. There's also been a highlight that the government has stated in the Economic Survey that there has been from a recovery recovery in the economy has been completed when it comes to COVID. And apart from that, inflation, however, is not going to be as sticky as and as stiff as a challenge that it was in the year so far. The other highlights also flashing in on your screens. Keep looking at those flashes too. On the other factor, the borrowing factor may remain still on a higher side. So that's another cautionary remark. Credit growth, however, remarkably high. That's been highlighted. Current account deficit may widen. That's another point that you need to note. The rupee also may be under pressure. That's another comment that the economic survey highlighted. Exports, however, are surging. That's a big positive. The fiscal position is going to be very, very important to watch out for, because on the one hand, when the government says that we have seen completely recovery in the economy from COVID, now to have a loose fiscal position is something that they cannot afford for much longer. Now, will there be an indication from the government on that front is something that we will have to watch out for too. Avinash, your last comments on the economic survey and what it indicated in terms of the state of the economy, and any kind of highlights that you picked up that could be also making its way into the budget tomorrow.
No, I think you rightly maintain that fiscal deficit is going to be very important. If the market gets a fiscal deficit of 6% or below 6% in the coming budget tomorrow, I think that would definitely give a really big boost to the market sentiment. And secondly, as mentioned in the economic survey, private consumption is going to be given a strong boost. So you could expect strong announcements for manufacturing, for capital goods, affordable housing. So I think the budget is going to be on these similar lines. More importantly, I think since it's a pre-election budget, one obviously expects that not much of political, kind of goodies are given in the budget, because that is
Sure.
something which will affect the fiscal deficit. So net, it's a good economic survey. I think we'll have to wait for tomorrow's budget.
All right. Well, thank you so much, Avinash, for being with us and sharing your viewpoints on the Adani FPO and overall markets, and the upcoming expectations from the budget too. As we close down, we're just about 9 minutes away from the closing of the day. 90 points up on the Sensex, 26 points up on the Nifty as well, inching towards a green close perhaps in today's trading session for the second day in a row. Then that would mean in terms of the kind of market close that we're seeing ahead of the budget. But definitely markets waiting by and standing by for the budget announcements tomorrow. With that, we wrap up this trade, and we will be back with the live market coverage even tomorrow, when the biggest D-Day is going to be there, the biggest trading day of the year perhaps for us, and that's going to be very important to track as to how the markets really read into the sentiments and the announcements that are made in the budget. So do stay tuned. This is going to be the destination that you should be at on Business Today TV to catch all the live and exclusive updates from the budget analysis as well. And don't forget to subscribe to this channel. Stay with us via our other social media platforms that will be continuously buzzing tomorrow right from morning. It will be a huge 100-hour coverage that we'll be doing right here too. Many thanks for joining us, and do stay tuned on to Business Today TV.